Hey, Steve, any components you want to point to while Rick's been looking at a lot of those headline numbers?
Yeah, it does such a good job on giving those numbers there. So the big story here, 3/4 of the decrease in prices on final demand attributable to gasoline prices. So that's, kind of saw that coming. Same time, Becky, I'm looking at final demand for services, and I got to put my glasses on, up 0.4% in August. That's the fourth consecutive rise. And a bit of that is the trade component, which is a weird component that most economists kind of look past. So I think this is an okay report when it comes to looking at what's happening up the pipeline. When you look at the intermediate processed goods, raw goods, you are seeing some abating of the inflation pressure in the pipeline. I think what may be happening, Becky, is a kind of a divorcing, so to speak, of the input costs and the final cost to consumers. There's a whole lot going on the consumer end, from passing along higher wages, with the labor shortage, to the ability of companies to pass along and keep those price increases. So it is good. We have some relief and pressure on the producer price side. Just not sure how much that matters at this moment on the consumer side. And I think there's still concern that you saw yesterday, the core numbers still going up inside the consumer numbers. That's the thing the Fed's going to focus on.
Lindsey, when you look at this number added to the CPI yesterday, what's your takeaway? I like Rick's point that hopefully we've seen the high watermark on this, but that doesn't mean it's coming down to reasonable levels anytime soon.
From the Fed's perspective, this is a promising report. I don't think it's enough to shift expectations back to a smaller expectation of 50 basis points, but I do think it's enough to remove any sort of outsized pressure for the Fed to make a materially larger increase of 100 basis points or more. So from the policy perspective, this allows the Fed to stay the course, but with inflation still at a 4-decade high, this does continue to exacerbate pressure for the Fed to remain on this relentless pathway to higher interest rates. But from the consumer's point of view, with gas prices retreating, again, this does offer a welcome reprieve on a monthly basis, but it's not enough to offset those rising costs in other key areas. We see food prices yesterday up 0.8, housing costs up 0.7. So from a consumer standpoint, we're still seeing this mounting level of pressure from a price standpoint, and this is going to add that downward momentum to not just the consumer, but the overall broader economy.
Sarat, what do you do as an investor after that huge drop yesterday?
Yeah, I mean, you've got to look at companies that are going to be able to deal with rising input prices. So, yeah, gas prices are coming down, but if you look at wages that are still going up, and your average worker is saying, hey, I need to kind of come back to where we are. So I think companies that have high labor components and have high kind of rent components are going to have a harder time. So we're really focused on companies that are going to have operating leverage. And in this case, it could be some of the software companies, too, because their costs are not as high as some of the other labor costs. And actually, what you have to look at then is demand. So I think what the Fed's trying to do is not just bring prices down, but also lower demand. And if demand comes down, that's going to actually bring the economy stable, which is kind of contrary to what people think. So I think you got to look at companies that are going to do well. Software companies like the Oracles of the world, financial companies that are holding a lot of cash, or a Morgan Stanley, Bank of America, that are going to have great upside in terms of interest rates. But I think at this point, companies that have cash flow outside of 5 years are going to have a harder time, because right now investors like us are focused really on really good companies with balance sheets and cash flow positive. And if you're pie in the sky, you're going to get hurt even more given kind of the news we've had in the last 24 hours.